The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful August 16th at the headquarters of Technical Trading and Investing, TFNN.com. We are here in the studio today, and we'll be back at 4 o'clock to do the Tech Insider Hour. We've got two engineers, Closet Case Al and Disco Steve. And, of course, they subjected anybody listening to the intro to some of the worst music ever played on podcasts. We can only hope that they see the light, come to Jesus, and start playing some decent music during my show. Maybe too much to ask. But, if they can put a man on the moon, maybe we can get these guys to switch and start playing really a good music. And gospel would be better than your horrible disco. So, anyway, we do have a great day out here. The S&P is at 1655.45. Pretty much about what I looked for. We've been talking all this week, and pretty much starting last week, that there was a very high expectation that we'd see the S&P expire somewhere around 1660 to 1665. We are a little lower, and I suspect that there is a good reason for that, and that was probably people starting to get a little scared, and in midday we started seeing some information about inflows and outflows about Treasury, but we'll get to that in just a minute. On this day in 1896, why salmon fishing near the Klondike River in Canada's Yukon Territory? George Carmack reportedly spots huge nuggets of gold in a creek bed. And, of course, the huge gold rush started in the Alaska gold rush, the rest of the gold rushes. Everybody was rushing for gold. Of course, today we have a huge movement in gold continuing. We're up $12.90 on gold. I thought maybe we were in a trading range up to about $13.40. Of course, we blew through that yesterday and continue to move up $13.73.80. So the gold bulls are big, and they're out there with their pans, and they're finding some big nuggets out there. Of course, there were some big people stepped in yesterday to push gold through, and I suspect maybe they think that there's probably some shorts on the gold side, and they were able to snag them yesterday, and probably a little bit of a short squeeze in the gold market. Maybe we get back down into that 1340 range after the short squeeze, but we'll see what happens Monday and Tuesday. But that's it. Well, anyway, one of the things I did want to bring up, and I'm going to talk about it a little bit more tonight on the Tech Insider portion of the show, that is that we've got, when the gold mining actually happened, who made the most amount of money? People out there panning for gold? Or the people we still hear of now, Levi Strauss, the people that were selling the shovels and the picks and the axes? And probably the much better bet would have been to open a rooming house and sell implements than actually go panning for gold. About 98% of the people walked away with nothing. 2% made a lot of money, and that's what always has this easy money connotation to it, and that is the gold rush. Much like the stock market sometimes. We see a lot of people getting in and going after the gold, and the people actually selling the implements have a better shot at it. And I actually talked about that today in the Tech Insider issue, which I didn't check and see if it was out yet, but I will during the break. But it's going to be interesting. Now, here's what has got a little bit of everybody spooked. Hang on a second here. and we'll get back to that. Foreign investors are exiting U.S. Treasuries. We saw the outflows now for June come in, and if hopefully you're watching on Tiger TV or in the Den, you'll see that huge spike down. Now look at the last time we had a spike anywhere close to this, and yes, that's real late in 2007. So normally when we start seeing these kinds of changes and problems with liquidity in lending, you do see these huge moves. And of course, when that news came out, everybody a little bit freaked out. And of course, the question is whether China and Japan will continue to come in and buy treasuries from the U.S. Maybe that's another reason that the Fed should back off and get out of the QE2 business. We have been talking about pretty much the expiration bias, and we've shown some charts. We'll show one again. I'll get a chance to run it here before the end of the day. But we've been showing it since last Thursday, so hopefully viewers on Tiger TV have seen it. But if you ask a bunch of people, in the case of a big gallon jar full of marbles, you go into a bar, set it on a bar and wait for 25 people to come through, you're probably going to be and ask them to guess how many marbles are in it. You're going to have a lot of people way off on the upside. One guy's going to say one guy's going to say 40 million. Neither one of those guys, of course, is going to be right. But if you get to start getting about 25 people, you're going to get awful close to the right answer. What we have in options is the same thing. 85% of them go unexercised, which means that they lost pretty much all their value by the expiration date. Today being options expiration or monthly expiration. So what do we have in this? We know that if you look at the puts and calls and you get a big enough market, enough people to ask, that you're going to get a fairly good indication. Now sometimes the indications are better than others. About 3 times a year you get a really good look at it. In my newsletter on Wednesday night I said we were going to have a gap down even before Cisco came out and said that they were getting rid of 4,000 people. One of the reasons was that we continued to see that the option market makers weren't flinching. They were pretty much sanguine with a 1660 to 1665 range. Now normally, it depends, but normally you want to give it a little leeway of 10 points up or 10 points down on that S&P call. But if you just figure out where the most amount of money is going to be lost, you get a fairly decent indication. Where actually, I think part of the problem where we're going to be down even a little bit more was some of that Treasury news and the outflows, which could become a huge issue. The second was that India had its biggest losing day since in 4 years. It was down about 4%. India has some of its own problems, but certainly that Asian continent really has a problem. We don't see China really picking up, although some people are saying it does. Japan, not really. And now we're seeing some of the, another billion people in India having a little bit of a problem with their economy. So we've had that. Anyway, I wrote this in my newsletter today. This morning, before at 9 o'clock, before the bell opened. It is expiration. We're expecting to see a narrow trading range all day. The pattern has been for many months now, if not, well, I'm going to even say years. The pattern has gone that Thursday is the big activity day, and that you normally have a very narrow market moves on Friday. Anything we're looking at the worst day in India, bias should be to keep the market flat, which normally want to do, but later in the day, pressure is going to swamp the market option market makers who would love this to expire at 1660. In fact, we may still have a little bounce out there depending on how much powder they came up with. But I do expect that they will try to keep it up until after lunch, and almost to the T, pretty good. But been hitting some really good calls over the last week or 2 weeks, and just wanted to share that with you. Today's charts are not probably as useful as most because, of course, we've got the options expiration and a lot of stocks out here, especially stocks like Apple. They're going to push or try to push right to a number that will mean the most amount of options that are possible can go and be expired. And of course, option market makers normally are the same big street names that we have out here. Did I have Apple right at $500? If you go back, and I haven't even checked it yet, maybe I'll get a chance during the break. But this is a good day, especially if you're looking at a stock. You're trying to figure out what to do with it. If you get a stock like Apple, you know there's going to be a ton of options right at $500. Now, if it gets to 505 or 495, those 500 is going to be worth a lot as puts or calls. But if you hit 500 right on the dead bang, you're going to be able to kill off a lot on each side. So normally there is a big, and we've watched it, especially in Apple, it's getting almost sickening how the option market makers are pushing this right to that number. Now, maybe there's a little bit of movement out here because of Carl Icahn, but I suspect the market makers are out here and pushing this thing up and down, trying to keep it within probably a buck of $500 at the close today, no matter what happens with the rest of the market. We are seeing more weakness out here, 1652.89. Now that we've broken this 1683 mark, gap down, we had volume, everything. The question is, where is the next movement in this marketplace? I suspected that we're going to have a bounce on Monday and Tuesday. This is going to be options rollover and set up options into September and October. This is normally a fairly big month where we get into that. So while we may have a down day today, a little more down, I suspect we still have some issues Monday and Tuesday with options rollover, maybe get a little bounce out of this thing. And then Wednesday, I suspect we start and continue our downtrend fairly decently. The next level I'm looking for is the 1620 level on the S&P cash, and that is maybe a lot closer than we think if we depending on how this news is being reported. I didn't watch the news the last couple hours or the ticker, but I suspect that news of the Treasury outflows is going to be problematic. You can give me a call, and of course it's probably going to be a fairly quiet day today, so make sure to pick up the phone and call 877-927-6648. I can feel you reaching for the phone right now, and give me a call. It's going to be a great day out here, and we've got a nice market out here. People making money in gold, people making money short, but we can see how this is going to move a little bit later. Anyway, you all have a great and safe 5 minutes during the break. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, look at our market at 1653.75. Pretty interesting to see us down 7 points on expiration. And we'll have to see how this comes out. But very interesting out here. Of course, Apple, I'm looking for it to hit 507 to 514 on Confluence. And even, maybe we were going to see a lot of PR on Apple. Notice today that there was some arguments about who was going to be the first one with the smartwatch out in September, Samsung or Apple. There's some other PR, but you can really see that the PR machine in Apple and Icon has been turned up pretty much all the way. It'll be very interesting to see how long Carl hangs on to Apple. He's been able to do fairly well with Netflix and some of those other ones. Anyway, now what happened to Disco Steve, Mr. Al? Is he off in the bathroom again? Don't see anything. Huh? Anyway, oh, he's right there, huh? Okay. Oh, you sent him on a break. Ah, okay. Well, I wish you'd send him to get a new shirt that was non-disco. It was blinding me today. Anyway, we've got some movements in the market today. The first one I want to talk about is Nordstrom. JWN is the symbol. They came out with earnings last night. Not so good. And, of course, we're blowing away the previous low from June 24th at 57.07. Had 1.5 million shares back on that date. And, of course, we've blown through it just more today with double the volume already. That opens up the next level down, which would take you probably somewhere into the 54 range. And, let's take just a little closer look at 54.50, and probably back down to the 52.16 low from March 19th. A lot of these retailers are a feast and famine. Of course, we saw Walmart come in with poor earnings, and I haven't checked to see how much worse this is doing today. Certainly looks like this Walmart at a low today was 73.70. Still needs to get down to 72.90, which was the June 24th low when we look at it. So I'll try to see if there's anything else. Let's do this real quick. Let's see. NASDAQ. I know all the housing is doing well. We're going to talk about that in the bottom half of the hour. Just want to see what else is moving. Now, we've got, I kind of warned about everybody about RIM yesterday. It's off 4%. Apollo, and it seems like this one's always at the bottom of the list out here. This thing keeps grinding slowly lower. Of course, Apollo, the for-profit education company that continues to have issues and probably will eventually go out of business. In fact, both of those at the bottom of the NASDAQ 100. Other stocks of interest, we've got a lot of them. For as bad a day as this is, pretty bad. Of course, we've got some of them coming a little bit better up. Cree bouncing a little bit after its earnings. Of course, it got hammered down. Probably not much more than a reaction. This thing had fairly decent support from previous lows on May 23rd in the 57s, and actually got to 57.03 on June 24th. It hasn't gone below that. Looks, we're going to be just above that. You'd want 57.45 for this thing to come back in, but it came down on monstrous volume, and maybe getting a little bit of exhaustion move in this. There are a lot of true believers in this company. I had been warning about it and actually wrote in the Tech Insider what the problem was on May 31st. We're going to continue to see, I suspect, a weakness in Cree for some time to come. And of course, you can always get a free free trial of the Tech Insider. Just go to the front page of TFNN. Other stocks out here. Gold. Let's take a look at those real quick before we get in GOLD, get into the housing stocks, which look very interesting out here. Gold right up to the resistance levels that we saw before. Rheingold's got this high on April 25th, $82.87, 1.3 million shares. We're probably, just a buck underneath it from today's high, a little spinning top. If you were in this one from pretty much the bottom, this thing almost completed its ABC. In fact, it has. It's gone 50 cents off of it. Time to pull the ripcord on this one. Ring the register. That's a 1-to-1 ABC. Time to take your money. We will be back in a minute. Give me a call, 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We have some other stocks moving out here. We'll talk about them. I did want to, maybe I've got a chance to actually get the there's my scans, there's my home builders. Wanted to look at these things because talked about them a little bit on Wednesday night during the Art of the Chart webinar, and just how interesting these housing stocks were, but looking for a bounce coming back into there where we would start finding resistance levels. And we kind of got into that today, but we've got a lot of these stocks were at least bouncing earlier in the day. They look like that they've come off some, but started to come right up into these confluence levels, and interesting. The ones I wanted to look at were Ryland, and not too bad out here. Let me see if I can't set it up. For those that have been following the show this week, when we have these big downdrafts, one of the things that you have to know is that when you make ABC downs, what really you're looking for on the way back up is expansions, and those expansions and retracements will set up confluence levels. Those confluence levels will be predictive if they come over a decent amount of time and a decent amount of a price differential. You've got some pretty nice ones setting up in companies like Ryland. You had a nice little bounce out tomorrow. What you should know, though, is that these stocks coming in on a downtrend with a fairly decent energy are going to have a resistance after they have their first automatic rally. Normally, it's pretty tough to figure out where stocks are going to bounce on that first bounce off of a downtrend. But if you get a couple of them, you get the confluence level. You're basically looking at the 382 of one Fibonacci retracement to the 618 of the other. And between those, there'll be a small little price if it works correctly. It doesn't work on all stocks. Not the stocks being different, but a lot of times the setups aren't different. But what you really want is a nice tight range. I really like about 0.5%, but and go as much as a 1% range will give you a good one. If they get wider, they become more, how can I say it, more congestion than a very sharp resistance level. We've got pretty much got close to that today already. Maybe we see another bounce back in here. What you want to be watching for if you are trying to play these bounces without any real retest of previous lows. Now, yesterday we did have a nice big low in Ryland, so you got to figure that we're going to come back and test $33.04. What you want is pretty much all the interest in these to be given up, not a huge bounce with a volume. You want these volumes to be low and the volumes start coming in as it comes back up, not just a massive reversal on one day and everything is over. Normally that signs that we're going to bounce and come back to that 33.04. At the same time, when we bounce, how far can we look, and whether or not you're willing to set up maybe a third ABC down, maybe you're thinking of playing it. That range between the 382 and the 618 of the previous moves are going to be it. And we've got a pretty nice one up here in the, what is that? I can't hardly, I'm just getting too old to see out here. What is that? 38, yeah. 38, 87 to 39, looks like 08. So you got a nice clean range. Of course, I'm looking at this monitor from 4 feet away. But you've got a very clean range. And this one, I'm going to call it this pink area. I'm kind of colorblind. But you got it pretty much in that 39.20 area, 38.80 area. You got about 40 cents, and that's going to be a fairly hard and stiff resistance. We came kind of close to that already. Look for any bounces Monday and Tuesday, and whether or not these stocks have any energy when they get back up to that level, instead of just a huge short squeeze that's one day and over. And of course, notice we're not getting that kind of volume there today. Let's see what today. Well, let's update this real quick because I'm falling behind on my scans. Oh, it actually did come back. Okay, yeah, 1654, down 7 points on the S&P. Cash, 2.3 billion shares. Didn't expect a lot of volume after yesterday's huge move, but still kind of interesting to see that even during expiration, having a hard time pinning this at 1660 to 1665, which is where the option market makers would be. Other stocks of interest out here, Pulte Home. Let's see if we have anything on it. Kind of the same thing. This one I like very good because this one has a area of agreement that is just pennies. So if we want to be looking at some of these stocks in the real estate area, you want to get this one out and you want to work the confluence numbers with it. And I'm going to go through this for those people that haven't done confluence numbers so far. But you've got that very narrow range. In fact, you can't even see it I don't think, on the screen here because it is so narrow. But it is right about 1814 to 1816. It is tiny. And you're going to see that's where resistance in the Pulte homes should be. Normally this is a great setup for seeing these work. And you just got a penny or two out there. In fact, it may even be just a penny or two in the reverse. But that's where you're going to find it, right out there at that 16, what is that? Let's say, yeah, 16, 18, 16, 16. Or excuse me, 18, 16, 18, 14 level out there. But anyway, what you want to be doing is looking at the 618 of one to the 382 of the other, and this is going to be nice. Now, the energy actually did come in and increase on this last leg down. You did have decent volume also, so we know we're going to get this retraced. If you were planning on shorting this one again, which I probably wouldn't, you've got to bet that you're at least going to come down and test the 1423 once again. But what would you have for an ABC down from 18? You basically have a $6 ABC down. If it busted back up to 18, you'd look at something like 12, which I don't think you're probably going to get in this market. So probably look at the 1423, and if it gets up to that 18, 16 level, that is probably where the top is if you're trying to play a bounce. During the same show, we were talking about some other confluence levels and some stocks that I liked long term, but you're going to have to wait for a pullback. There's a smaller consolidation number and a larger one in lumber liquidators. But in this one, you want to be getting down to about that $82 level. This time you're going to see it in blue. Right about that $82 level if you're looking at Tiger TV. Let me see if I can't zoom in just a little bit more so you can get a little better view of it. But again, you basically work off the highest price when you're coming back down, which is the August 1st high at $98.41. You then pick the next two down legs. That would be the June 24th low at $71.63. And the next major low that you had on this thing, because this is a huge move, is the February 26th low at $53.73. So if you go back and put that together and do your, you can also, of course, always, if you have the art of timing the trade charts, it does it for you automatically. Hint, hint, wink, wink. But it is a beautiful setup out here. But if you want to be putting on alarms, I certainly think that you want to be looking at this $82 level in lumber liquidators. Of course, all these stocks with flooring looks like everybody's done with their ugly carpeting and are coming back. Mohawk carpets, this one actually finished at 50% retracement. This one may even be better than the rest. It is so heavily owned by William Buffett and Berkshire Hathaway. Kind of interesting, this thing did come back, totally fill its gap. And this thing had a monster gap up on earnings. It's come back down, and it's come back down with a light volume. Now, I don't think that the market is probably going to go higher here, but you probably couldn't find a better setup in the marketplace than this one right here, and that is if this thing can hold 120 till whenever we're done headed it down, that is the best looking stock in the market, and I think we were looking at it Wednesday. Tom and I were during the webinar on the 14th. This thing had come down and almost filled that gap that it had up on earnings. And of course, yesterday and today, kind of coming out at that level. But anything around that 120 level, maybe 121, is your buy zone if you can get a market to start cooperating on the upside. So a couple of these out here, the lumber liquidators, the Mohawk carpets, look rather interesting. Of course, they're less tied to actual new home construction, to actually people running around with muddy feet getting the carpet dirty, and Mama saying, "I want some new carpet in this house." We've got Disco Steve back here, and He's got some kind of real funky glasses on today. I don't know what the deal is on that. They look like those wraparound things that the NBA guys are playing with. The ones with the things. Oh, what's Cazal? Is that the maker of them? Don't know him. I don't like wearing glasses at all. They can always give me headaches, especially over the knees, over the ears. Over the knees. We look at Pulte. We looked at Ryland. Let's see if we've got anything else. Well, we've got pretty much the 618 pullback in USG. Of course, they make the wall board, the dry board, and a lot of the other stuff that goes in houses. And it started to bounce. So this did hit the 618 retracement. This one is and didn't come off the ground as quickly. You can make a case that this one actually does have an ABC set up. And of course, well, you actually came back 64%. So a little bit more than you would like. Of course, that did reverse that day. If we are going to see more construction, and this is an ABC up, you've got $29.22 into it. So, interesting. So, I guess let's take a quick look at Lowe's out here. This thing pretty much completed its ABC. It got within 60 cents of it and rolled over. Let's see if we can't. I guess you could make a case that maybe that was the A also. What is that? 37.07. Take a quick look. Yeah, that would make a little less. I guess that can't. This one actually retrace that much if you make that an ABC. So let's take a look at this. That's probably more like it there that we're looking at. And a much shorter leg up here. But that's probably really what I'd be looking at, which is the A point on February 25th at 35.86 on Lowe's. The B point coming in on May 22nd at 43.84. And your C point was back here at 38.78. And of course we were just 60 cents shy of the 1-to-1 out here. Of course, you really had one day with some volume and you went sideways for 4 days. I think you probably have a good indication that this thing is topped out, especially with the action in the rest of the markets. So, we can probably be looking at a lot of gold stocks. I suspect we're probably going to be finding those at some of those highs. Let's just look at HD to see whether it's doing something here. HD a little different. This thing did top off with a whole lot lighter volume. Actually got into the candle of May 22nd with 14 million shares with 6.8 million shares and just gave it up and has rolled over ever since. Now the question is, what do we do for a retracement? So far, we've blown through pretty much the 618 of all of these, and there just isn't a whole lot here to hang your hat on. In fact, the volume yesterday would suggest that at least Home Depot has a good chance of coming back to the $72.41 low. Certainly the weakest of Lowe's and Home Depot. Did we look at any others? I think we've looked enough in this sector. How much time do I have left? I just got a minute. Again, be in at 4 o'clock doing the Tech Insider Hour. I hope everybody will be able to join me then. And you still have plenty of time. I know it's a quiet day out there with options expiration, but pick up that phone and give me a call. 877-927-6648. And if you are new to the show, you can check out my newsletters on the front page of TFNN. Just go to newsletters. Check out the Path of Least Resistance, my daily newsletter, and the Tech Insider, my weekly tech newsletter. And we'll be talking all things tech in the 4 o'clock hour on the Tom O'Brien Show tonight. Give me that call. Pick up that phone, 877-927-6648.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
My ears are bleeding. They are just bleeding. With a mind, this is the cotton candy of music. Just sugary sweet, no substance, just all vanishes instantly, totally forgettable. And for music, it goes against all my rules. It is dreary, dingy, and derivative. It is a derivative. All of them sound the same. Well, hopefully we'll have some better music on Monday. I'm hoping. But I don't know. It almost I almost feel kind of like Charlie Brown and Lucy, where they just always pull the football away from me just when I want to kick it. When there's going to be a great Grammy-winning song, and they bring some stinker and steamer from 1980s back out, just to let it sit in the sun and waft those odors of horrible music back up into my nostrils. I guess it'd actually be my ears, but I think it's the symbology you get. Anyway, we're looking at silver wheaten. I had a question in the den of what I thought of this thing. And, I mean, you've got some nice energy out here. The energy is certainly coming up. The question that I would probably ask is where you got into this thing. Because you've got certainly energy up on this. The question is, how long do you want to hold it? If it was a trade, what your original plan was. Silver wheaten has got a huge move out here. You just basically kissed the last gap up until you get into the 34s. Now, on an ABC, I don't know what your original trading plan was, but even at any ABC level out here, you have to say that this thing has gone through the 1-to-1. You had a huge volume yesterday, and if I were sitting on a ABC up and I bought back in, back down the lows, or maybe 18 or 19 bucks, I would probably, I'd probably hang on to it. You've got huge energy up here, and you've got no sign of weakness. You've got that huge volume day to sit on, so I would say that you'd probably not want to give back any more than 20 bucks on or 24 bucks on a trade, maybe 24.50. But you could get solid extensions on this, which are all the way up to $30.28. And if the market keeps going absolute nuts, with what we had today, it looks like we're going to close out at 1660, even though we did see some weakness. You're going to probably have Monday and Tuesday that go sideways, and I figure the markets, including the commodity markets and everything else, are probably really going to get back into the swing on Wednesday. So if it's a long-term hold it. If it was a trade, you got all of your ABC out of this thing. But I kind of go back, depending on where you're at on this. If you bought it down there at 18 to 20 bucks, I'd be holding on to this for a while, because it certainly looks like a good position. In the book Reminiscence of a Stock Operator, Jesse Livermore, the world's greatest trader, goes in and talks to Mr. Partridge several times. And Mr. Partridge says, I can't give up my position. And Jesse said he had a hard time figuring that out. And that was let your winners run, was basically that. But he said, I just can't give up this position. If I sell it and try to buy it back again, they can force me out. If I'm sitting on a big profit and there's really nothing, no sign of weakness out here, that would be it. But you had a heavy volume day down back in silver wheaten on 415 with 13.6 million shares. You blew through that with 14.2 million shares yesterday. You're off to the races. It looks like a great trade, and I just put a stop in down below. But I'd be a holder of this at 18 to 20 bucks. That's where I got in. Anyway, you all have a safe, family, wonderful weekend. What the?
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.